When you're looking at a listing for property in Florida, you're going to see an estimate of the taxes that will be due each year, but that is absolutely not the whole story. Why do property taxes for two houses in the same neighbourhood vary so much? Stay tuned, I'll explain why. Hi, I'm Margaret Jackson with the professional agent group at Keller Williams Realty in beautiful Clearwater, Florida. You know, with 17 years of experience, one thing I always tell my clients is that the property taxes you see on a listing is not what you're going to pay. In fact, if you've owned homes in another state, at first glance you might think that Florida's property taxes are exorbitant. Other people feel they're pretty fair though, because we don't have state income tax. It's no surprise, you know, is it, that our governments do require money to operate, and as a result our property taxes are an important source of revenue. In Florida's property tax system, the county property appraisers assess all real property in the county as of January 1st each year, and it's based on sales the full prior year. So the property appraiser sends in the mail an annual notice of the proposed property taxes in August to every property owner. Now that's called a truth in millage notice, a trim notice. It's not the bill, so you're not paying anything right then. What it is an estimate of the property taxes based on the proposed tax rate, your property value and any exemptions that you've got, and it will become due later in the year. Meanwhile, the local governments are busy determining their annual budgets for the following year, which then allows the tax collector to send you an actual bill in late October or November. So everyone who owns a property is then paying their actual share of the budget. So every parcel of real property has a just value, that's basically the market value of the property, an assessed value, which is that just value minus any assessment limitations, and stay tuned, we'll get to those various exemptions and the Save Our Homes section in a minute. And then there's the taxable value. The taxable value is the assessed value minus the exemptions, and that's the value the tax collector uses to calculate the taxes due. So why do houses have different taxable values in Florida? It's because we have a number of exemptions, but the chief one among them is the homestead exemption. So a homestead is a person's legal primary residence. And there's some criteria to establish what that is. So the taxable value of homestead property in Florida is going to be typically lower than the market value. You can homestead your primary residence in Florida and it entitles you to a discount off of the taxable value of your property of about $50,000. That actually saves you somewhere between $500 and $800 a year off your actual property tax bill. So after you've claimed homestead, and in addition to it, Florida moving forward then caps the amount that your taxable value can go up each year to 3% of the taxable value, or the rate of the consumer price index, whichever is lower. And if you own a home, you accumulate that difference between the tax assessed value and the market value, and it can make that huge difference. And you're seeing that on the listings when you see a property that's been owned by the same homeowner for a long time. It just helps homeowners not be blindsided by massive tax increases when property values go up. And isn't that what we've just seen? If you had a Save Our Homes benefit on your former residence, or now you're thinking of moving, did you know you can also transfer that to your new residence? This is called portability, and you do need to apply for portability. What if I don't have a homestead? What if my property there is a second home? Don't panic, we've got you covered there as well, and we'll talk about that when we get to the chapter on the 10% cap. So one of the other reasons the taxes may be way off is any one of the other personal exemptions that will provide discounts being included, such as being disabled, being a widow or a widower, active duty military, or a disabled veteran. You know, in some cases, a disability for a veteran can mean the total removal of the Ad Valorem taxes, and the listing might actually state 0 taxes. Let's actually jump on and look at a listing though and give you an idea about how the property taxes play out on listings. Let's suppose, for example, you're considering buying a property in one of the best neighbourhoods in Odessa, which is Starkey Ranch. So let's take a look at this property. Now, the homeowner's taxes in 2020 was $6,318, but in 2021 that home was sold to a veteran who made it their homestead. The taxes dropped to $2,989. Now it's for sale again at $672,000, and the Pasco property appraiser's website shows that the total taxes will be $11,121. You also need to understand a couple of other things in the tax world: non-ad valorem taxes, CDD fees, and millage rates. So non-ad valorem taxes are mostly for things like garbage collection, mosquito spraying, stuff like that. They aren't typically large amounts, often about a few $100s a year. The CDD, though, is a community development district. That's a special taxing district that funds infrastructure improvements in newer developments like Starkey Ranch or Bexley's Del Webb, and that can be several $1,000s a year. You might want to check out our earlier video on CDDs for that. So the millage rate is the tax rate that's set each year by each municipality. The millage rate is per $1,000 of assessed property value. So for example, if a property you're considering has an assessment of $275,000 and the millage rate is 20 mils, your property taxes would be about $5,500 a year. You know, if you bought a home in Tampa Bay before prices went up, my gosh, right now you're one of the lucky group of homeowners. You got a low purchase price, you got the best interest rates, and you got those low property taxes. But what we know though is life still happens, people are still moving, and today's situation will be envied by future buyers and sellers, don't you think? What about non-homestead properties? Great question. Well, the 10% cap applies to them. Florida created a permanent constitutional amendment in 2019 to give you some protection too, and it limits the assessed value of non-homestead property to no more than 10% each year. And it really does help slow down that massive increase in tax rates. Any non-homestead property like second homes, residential and commercial rental property, vacant land automatically qualifies for that non-homestead cap, but it doesn't apply to school district taxes, so that schools aren't adversely affected by that cap's existence. That benefit is automatically applied to non-homestead property in the year after purchase or change of ownership, and it does get removed automatically when there's a change in ownership or a change in use. Well, there's good news about taxes and mortgages, and that is, all in all, it's still cheaper to own a home than it is to rent. And if you've looked at rental costs in Tampa Bay recently, you know what I'm talking about. Online, you can use a property tax estimator or calculator to get a much more accurate estimate of what your property taxes will be on a new home. And this is especially helpful if you're looking to buy a home in Florida, because most counties have got this calculator on their website and it's going to reflect those various millage rates. It'll give you a good estimate, but did you know you can also call the property appraiser's office to nail it down further? Let us know in the comments if you've got any other questions about property taxes in Florida or real estate in general. We'd love to hear from you.